Hi everyone, Mitch Vanderydt here, one of Canada's top macro investors and mining entrepreneurs. Now, I am more of a numbers guy and a planner than a social media performer, and I work much of my magic in the boardroom. But I can perform if I have something meaningful to say, which for starters is that I found this stunning cowboy's hat with my grandfather's stuff, which I claimed as part of my inheritance. My grandpa John Vanderydt, that is, who recently passed away after living a full and successful life after having immigrated to Canada from Holland in his early teens, along with his 4 brothers and parents in 1953. Can't say I ever owned a cowboy hat before. I'm no cowboy, at least not in a literal sense, but I like what the cowboy hat stands for, which for me is colonizing and conquering the frontier, making new settlements and raising families, as many of our ancestors did in North America, especially in the 1800s, while the transcontinental railroads were being built. My grandfather was somewhat of a cowboy. He worked on farms and herded cattle along the St. Lawrence Seaway in his mid-teens, not far from where I am right now, in rural South Ottawa, where I was born and bred, before moving down to the Toronto area some 20 years ago, where I spent most of my life mastering the metals and mining business, including in the areas of engineering, environmental permitting, and finance, on a quest that began with a top-notch education, including a Bachelor of Engineering in the 2000s and a Master of Business Administration in the 2010s that I did on evenings and weekends. And while I am no cowboy like my grandfather, I am quite entrepreneurial like he was, as he had developed a small slice of the residential land around these parts some decades ago, after his career as a superintendent building high-rises, mostly in Ottawa, but also including Toronto's Harbour Castle for Robert Campo in the 1970s. So when I worked in large consultancies or investment banks, I was there to learn for my own future entrepreneurial endeavors, just as much as I was there for a paycheck. And this work experience gave me a fair sense of how Canada's private sector works. I have also visited some dozen or so operating and development mine sites across the Americas, including Detour Lake mine in Ontario, beginning in 2009 when the market cap had just reached $1 billion, which I watched grow through its construction and early operations until 2020 when it was acquired for $5 billion by Kirkland Lake Gold, in a deal that taught me firsthand the immense scale of value creation that is possible only in the mining business. I had been working on Bay Street at the time of this deal, and I recall being somewhat surprised to hear and see some negative reactions from some of my analyst colleagues. They had thought Detour was a poor choice for Kirkland Lake to acquire, given it had been a large open pit with a rather low grade and high strip ratio with razor thin profit margins. For me, however, it had been a no-brainer deal, partly because I knew there was lots more lower grade gold within the waste zones of the open pit shell that could be converted to reserves at higher gold prices, and because I was fairly certain from my studying global financial markets that economic growth in the capitalistic Western economies was slowing and currencies were weakening. And so the opportunity cost for central banks and investors to hold gold was falling, which for me meant the gold price would eventually rise, like it has for thousands of years according to a similar cycle. And this is one of the reasons I invested so heavily in acquiring this skill set. And my assessment turned out to be spot on. The gold price rose, Kirkland Lake did more drilling and expanded the reserves, which ultimately led to the $22 billion merger with Agnico Eagle in 2022 to create the world's top gold mining company, at least for now. But some analysts seem more short-sighted and would have preferred to see Kirkland Lake acquire something less marginal, less risky, with higher cash flow yields, instead of a long-term value play like Detour. But I had personally been quite certain that then Kirkland Lake CEO Tony McCooch and outgoing chairman Eric Sprott had avoided those higher cash flowing assets because their market values and multiples were too high compared to that of Detour, especially in a rising gold price environment, which I had considered likely to materialize. Us value investors don't look for steady returns like growth investors do. We instead look for assets that are undervalued and hope that the valuation will rise substantially in the future. The great Warren Buffett takes this approach, as do many Canadian mining investors, including some top guns like Eric Sprott, who I mentioned, who is originally from Ottawa and whose name is on the business school at Carleton University, and others such as Frank Giustra, who's originally from Sudbury, just to name a couple that I follow. The mining industry is big, especially in Canada. It's also quite cyclical, which many people tend to forget with each major industrial or technological boom, which are typically counter-cyclical to the metal price booms. The metal price cycle typically spans 5 to 10 years, with changing supply and demand fundamentals translating to changes in metal pricing, resulting in huge swings in the value and economic viability of mining projects. The current metal price cycle, however, has essentially been stretched out to 15 years, which is somewhat stressful for us numbers guys. And so the world is now entering what is likely to be a prolonged, decade-long mining boom to allow supply to catch up to demand. And Canada is well positioned and well equipped to capitalize on this, as we have the most highly educated workforce in the world, including hundreds of thousands of mining professionals and tradespeople, and hundreds of thousands of more that can be trained, including among the millions of immigrants led into the country by the Trudeau-Carney Liberals over the last decade. But as with past tech booms, and as is maybe even more pronounced now, is that people tend to forget about the cyclical nature of the economy and metal prices. And in recent years, as economic growth in the current technological cycle has begun to wane, it has forced political elites to consider other options, essentially to feed their nation's populations. And these options seem to have included the idea of drifting into socialism, with a move away from free markets and private ownership, an idea many Western nations have been flirting with in recent years, and which has already devastated investment in many of them, especially Canada. Moreover, as the Trump administration so eloquently said in its November 2025 US National Security Strategy document, is that after the Cold War, American political elites were convinced that permanent American domination of the world was in the best interest of the USA. But they had miscalculated their willingness to shoulder forever global burdens to which there was no connection to US national interests. They overestimated America's ability to fund a massive welfare, regulatory, administrative state alongside a military foreign aid complex. And this led to American elites placing hugely misguided and destructive bets on globalism and so-called free trade, which hollowed out the very middle class and industrial base on which American economic and military dominance depends. Canadian elites also seem to place hugely destructive bets on globalism and on America's continued domination of the world. As such, Canada's economy has become somewhat dependent on importing cheap goods from China and selling them into the US, a plan that is not working very well with the current US administration. Meanwhile, Canada has also overburdened itself with massive welfare, regulatory, administrative spending that it's unable to fund, and Canada's industrial resource-based economy and middle class on which our great nation was built is starting to disappear, which does not look good for the next generations of Canadians. So Canada and the West must make some changes to save capitalism, freedom, and private ownership for the next generations. The last decade was essentially a lost one for Canada as far as I'm concerned, but we must get back to business and back to attracting investment to colonize the frontiers, back to building new pipelines and mines, both at home in low risk, low growth Canada and abroad in higher growth Latin America and Africa. We also need to implement pro-natal or pro-baby making policies to help reverse Canada's sharply declining birth rate and boost population and economic growth for the next generations. Getting back to building pipelines and mines will create meaningful and satisfying jobs that empower citizens, including new immigrants, and help make everyone feel like they're part of Team Canada. The world is changing though. We must be more efficient, and we must prepare for rougher times that lie ahead when the utility offered from human labor does start to diminish. This is starting to happen now and will perhaps accelerate in the coming years to decades. But I just saw a study that said AI is failing to outperform humans at a whopping 96% of the jobs tested, for which I will post the link in the comments. But some of the safest and most abundant jobs ought to be trades-oriented. One's focused on building pipelines and mines, as well as new homes and infrastructure, as Canada is set to enter a new age of reindustrialization with a resurgence in blue-collar professions that will increasingly work alongside robot helpers. Canada's capital markets will be an important part of this reindustrialization, especially our stock market, the Toronto Stock Exchange, because it's where Canadian junior mining and oil and gas companies source their capital to invest in exploration and development on the frontier, at home and abroad. And this exploration work is the furthest most upstream of industries. And so it's the most fruitful one that benefits the most downstream industries. For example, out of 10 exploration projects, maybe only one of them will turn out to be a mine in a given cycle. But the ore from that mine would then go through multiple stages of processing to final commodity products, and then to various manufacturing, technology, robotics, consumer products, and capital infrastructure uses, including AI data centers, with value and jobs being created at each stage along the supply chain. The mainstream media talks more about the latter stages of the supply chain, consumer products, AI, and robotics, which do create some jobs and value, but most of the value and jobs are created in the upstream end of the supply chain, especially the mining stage, because miners and their host nations get price participation on the commodities being mined, meaning when the metal prices rise, they get to keep the upside, which becomes all gravy once mining costs become covered. And metal prices right now are rising across the board, largely on sharply falling purchasing power of currencies, which you are also seeing big time at Canadian grocery stores. So the obvious solution is to attract investment to Canada to build pipelines and mines which will take advantage of the currently high and rising commodity prices and help drive economic growth and preserve our currency's purchasing power. Another reason why Canada's capital markets will be an important part of this reindustrialization is that they enable Canadian and foreign retail and institutional investors to invest in mining and oil and gas projects held by Canadian listed companies. But Canada's recent drift towards socialism has not been good for our stock market. And if the trend continues, the TSX would cease to exist altogether, as all private banks and corporations would eventually become nationalized in such a scenario, eliminating the need for financial markets altogether, as is what happened in the Russian Empire in 1917, following the Bolshevik Revolution and the formation of the Soviet Union, which did not turn out well for the people of Russia, Ukraine, and Belarus in the decades that followed. Canada's stock market is not at that point yet, but it had been drifting in that direction until recently, particularly over the last year when predatory shorting of small cap stocks and barriers preventing ordinary Canadians from investing have started to subside. Mining companies also seem to be once again competing for capital and making investments on the frontier, such as Osisko Development's December 5th announced 70,000 meter drill program at its large Caribou Gold project in Canada's westernmost frontier of British Columbia. But there is more work to be done, and that is why I intend to return to Bay Street to take a top mining corporate role and help make sure the work gets done, with the help of fellow mining corporates, along with brokers, engineers, accountants, and consultants, among many other talented Canadian and international mining professionals. Beyond making the share price go up, which is the easy part, my primary objective in this role will be to put the strong and free back in true north strong and free, and to help create an economically viable and prosperous nation for the next generation of Canadians, including for my 4 nieces and nephews, and including for my future children and for all of their children. I intend to achieve this by helping to streamline Canada's mine permitting process, by helping to implement pro-mining government policies, by helping to make sure there is no predatory shorting of small cap stocks on the TSX, and by helping to make sure Canada's stock market is democratized, so all Canadians can participate and own mining stocks as well as fill corporate roles, more like it was in Sweden where I lived and worked a few years ago. I also aspire to help Canada negotiate a trade deal with the Trump administration, including a coherent plan for critical minerals to reduce North America's reliance on China. I had joked on a LinkedIn comment recently that President Trump will be so excited about my solving all of America's critical minerals problems that he will completely overlook that the deal is even better for Canada, and that I would achieve this by adding certain complexities to the deal, as he taught me to do in his own 1987 book, The Art of the Deal, which is actually a great book that I highly recommend, and my reading it is probably one of the reasons I trust President Trump. I could tell from his writings that he could see the win-win deals. And for those who can see the win-win deals, they have no reason to take anything from anyone. The Trump deranged crowd seems to believe that the president is only in it for himself and for his family. And I actually tend to agree with them. And that's exactly why I support it. Because for him and his children and grandchildren to win in America, everybody else must win too. I believe he simply wants to make a country that is hospitable for the next generations of Americans, as I also wanted to help do for Canadians, including those in my hometown electoral district of Carleton, which surrounds Ottawa, where some folks have the same level of education as Ricky from the Trailer Park Boys and have no idea how the world works. To them, I would say I do have a pretty good idea how it works, and that if you have any regard for the next generation of Canadians, you will put any political or racial differences aside, stop clinging to any radical left globalist pipe dreams that will never work, and support me in taking a top corporate role in Toronto, where I will fight for all Canadians and help protect freedom, capitalism, and civilization for generations to come.